Hello friends, I'm here to talk about gold and the gold price movements. A lot of you are invested in gold, a lot of you planning to invest in gold. Maybe you're worried about the price movements. The last 2 years we've seen year on year steep increase in prices, and since the beginning of 2021 we've seen dips in gold on pretty much a daily basis. Now, why does that happen? It happens because gold prices also moves like all other investment asset classes on demand and supply, and gold particularly moves higher on prices when there is global calamity, when there are geopolitical tensions, or when inflation pressures are high, or when central banks are buying a lot of gold. However, what one needs to do when you look at gold as an investing, you don't really need to know all of these details, but what you do need to know is that gold is a long-term investment class, asset class, which means that you put your money in gold knowing very well that you will want to stay invested for at least 5 to 8 years and maybe even more. When we say a long-term investment class, what we really mean is that you will stay invested as long as you can and remove the money only when you need it. Well, don't just go by what I am saying, but let's look at this chart here. What does this tell you? It tells you that over a 20-year period, while we see gold prices moving and up and down, and possibly some years where the average price of gold has dipped than the last year or has gone into the negative, over a 20-year period, gold has been giving you a consistent return, and if you take the period from 2000 to 2020, you've made a 12.77% return on gold, annualized return on gold. That makes it for a very good investment asset class. However, all you need to do is stay invested, invest in the long term, for the long term, and don't worry when prices become volatile or you see prices going lower. Continue the discipline of investing as an SIP so that you catch the lows of the market and your returns are better. Happy investing. I love gold too.